The Top Producer Podcast is brought to you by the next generation of weed control, Liberty Ultra Herbicide from BASF. Learn more about the best Liberty yet at liberty-ultra.us. Welcome to the Top Producer Podcast with Farm CPA Paul Neefer. The Top Producer Podcast challenges farmers to think differently. Farm management, tax issues, policy implications, and more. Gain your competitive advantage on the Top Producer Podcast.
Welcome, everyone, to the Top Producer Podcast. I am Paul Neefer, your host, and today we're going to have a conversation with Drew Blankenbaker with, I'm probably going to butcher it, but Iroquois Valley Farmland REIT. Did I get that correct?
You did, yes. Iroquois Valley Farmland Real Estate Investment Trust, or REIT. Yep.
Now, when I think of Iroquois, I think of New York State, or near that area, because I think that's where that Indian tribe is from. Are you guys originally from that area, or you just like the name, or I'm just curious on that?
Sure. Our namesake is Iroquois County, Illinois, actually.
Oh,
our first
okay.
farmer
Okay.
partnership was based there. Yep.
Oh, well, then that, that makes sense then. So it's just like I grew up in Dixie, Washington, and everybody thinks when I say Dixie, they think of like Mississippi or Alabama or something. No, there's and Dayton, there's multiple Daytons. I lived outside of Dayton before we moved to Colorado. But and actually, as we tape this, we're taping this on Thursday, January 29th, and in 2 days, I'm getting ready to fly to Brazil for a farm tour. So,
oh, wow.
Which means I'm going to pay for it because I'm going to be gone almost 2 solid weeks, and it's going to be brutal, but that's okay. We always like to start off this conversation. Again, it's designed to be a conversation with your background, where you grew up, went to college, maybe what you did before you and your partner started this company, and so on. So as long as you want to go for it.
Sure. Yeah. Well, just want to say to start, thank you, Paul. I appreciate you having me on today, and excited to share about what Iroquois Valley is up to. And so I grew up in Louisville, Kentucky. Wasn't born on a farm or into a farm family, but while attending the University of Montana, which is where I'm based now.
Okay, time out. You grew up in Louisville, Kentucky. I got to figure out how you ended up in Montana, so you got to fill that in.
Yeah, definitely interested in being in the mountains. Enjoy being outdoors. But when my first summer in Montana, I had the opportunity to apprentice on a mid-scale vegetable farm, livestock operation in the Bitter Valley of Western Montana.
Beautiful country.
Yep. And it was actually one of the first organic operations in the state. Still based in Montana to this day.
Okay.
Ended up getting my master's in public administration from the University of Idaho, just next door.
Yep.
And started my career in conservation, land trusts, and nonprofit finance. So eventually found my way back to farming, and even had the opportunity to manage this very same farm business for about a decade that I had apprenticed at in years earlier. So helped to grow that operation significantly, expanding acreage and improving the financing of that business, and making long-term investments and the soil health and infrastructure at that operation. But I was just gonna say it's all that all that experience really shaped how I think about land and capital and risk, because I've been on the farmer side of the balance sheet and know what it's like to try and make growth work when you don't own the land. So that's kind of where I've always found myself, at the intersection of land and finance and working with people.
Just curious, so in the Bitterroot Valley, not a long growing season, what type of primary organic vegetables were you growing there?
Short growing window. We can get frost any time of any month of the year, but lots of root vegetables for that reason. Strong on carrots, beets, storage cabbage, lots of potatoes.
Things that could handle the cold or a frost every once in a while. Now, you're a grizzly. My daughter-in-law is a bobcat, and she's very happy because this year they won the national championship. But
That's
I'm
right.
trying to
Yeah.
remember when was the last time, because University of Montana won what, 15, 20 years ago or something like that, maybe 30 years ago. It's been,
That sounds
the
right.
last
Yeah.
30 years. So
it was right around the time I was probably at the University of Montana, but yeah, it's the first year I've ever seen Grizz fans cheer for Cats fans. So it was a special year in the state of Montana.
Exactly. So now, when did you get involved with Iroquois Valley, and were you originally there at the beginning, or just go through that for the listeners?
Yeah, Iroquois Valley precedes me, but definitely an important part of my early career, and was paying attention to their great work in those formative years. I guess first, let me say, 10 years ago, I was farming land that I didn't own, and had, you know, most of the advantages. And that's when I realized that land access wasn't just a grit or an effort problem. It was a system problem. It was structural. And reminded the old saying that if hard work alone led to success, the donkey would own the farm.
Yeah,
Well,
yeah.
it's that experience that actually led me to my work today. I've been with Iroquois Valley for about 3 years now.
Okay.
And yeah, as vice president of farmer relations, I get to lead our farmer relations team and portfolio management. I get to help design leases, our capital improvement strategy, and all the farmer support systems that we design to support our farmers. But I also work on developing a really high quality pipeline of future farmer partners. And that's folks who are aligned with our values and ready for long-term partnership. But I oversee the long-term viability of the farmers we work with, and really get to think beyond just short-term yield. We've got a really strong team. We're all remote, great leadership, and very engaged board, which makes it possible to stay very farmer focused and long-term in how we operate.
And since this is a REIT, and I know enough to be dangerous about the taxation and some of the issues with a REIT being a CPA and so on, typically you're cash renting the ground out to the farmer. You're not really actively involved in farming. Is that correct, or not?
That's correct. Yeah, our farmers decide how they farm. We do have the baseline of organic, which we can get to in a bit. But yeah, it's not. We're not an operator. We're not telling our farmers how to farm. So
maybe for the listeners, maybe sort of just outline how many states you're in, how many acres,
Sure.
how many farmers maybe you're working with.
Yeah, there's a lot going on in Iroquois Valley, and it's been built over the last 20 years. So we provide capital to organic farmers and farmers committed to transitioning to organic. And we're actively raising capital. This is a great way for anyone to get involved and invest in long-term stable asset class. But practically speaking, our model is very simple. We buy the land, primarily in Midwestern row crop, and farmers lease it long-term. And then that removes the pressure of land debt, which then gives them the runway to invest in the transition to organic, which takes 3 years to get certified. So that lets them focus on the farming instead of the financing. And then meanwhile, investors get exposure to very high quality farmland backed by real assets. We're regulated by the SEC and guided by our B Corp commitment to impact. So yeah, you're not really looking for the perfect farmer. We're looking for a committed one, someone who knows their numbers, takes care of the land, and really thinks long-term. Most of the farmers we work with are operators who are already really good stewards, but land access is their constraint. And they're just really open and transparent and willing to communicate when things get tough. And they see us as a partner, not just a landlord. Back to your original question, but and at the end of the day, the farmers who succeed are the ones that end up treating the land just like a legacy asset, and the business like a business. But
are you able to get a higher rent? I know organic pricing is higher, but you got a lot more management on the farmer side. So I'm just curious, maybe what the delta is between non-organic rent versus organic rent.
Yeah, it's a really exciting piece of our model, the lease structure. I'd be happy to share those kind of details. Before we dive into that, I want to, drive home the point that this has been a long time coming. Iroquois Valley was founded in 2007.
Yeah.
So, that vision to transform through organic land stewardship within a generation, it's taken us almost 20 years to get to where we are today, and have gone through various iterations of what that lease could look like and how we capture value. But as a certified B Corp, the company works with impact-driven investors, and then we provide the capital to organic, regenerative, and transitioning farmers all across America through long-term leases, flexible mortgages, and post-investment support. That's $126 million invested in close to 36,000 acres. That's row crops, pastured livestock. It's probably across, we're almost 20 states. 2/3 of those are currently certified organic, and the rest are transitioning.
Which means they could be 1 year into it, 2 years into it, or 3 years into it. Once they pass the third year, then they are certified. Is that right?
That's correct. Yep. So, well, first and foremost, it's about land security and providing farmers the runway and ability to focus on stewardship of the land. And like you said, we do that through long-term renewable leases. There's no forced exits because of our capital structure as a real estate investment trust. And farmers have the opportunity to buy the land after 6 years. A big on your question about the actual lease and how we can command additional rent, we've actually, we're to the scale where we can meet or beat what conventional lease rates are out there in the world. And that's because of our investment and capital structure. It's very much a partnership approach, in that farmers come to us looking to expand. We never buy land and then ask farmers to farm it. It's a very different piece of how we operate. And then we build all of this through what we call our hub strategy. We basically find concentrations of organic farmers that are able to help each other through that transition, through knowledge sharing and marketing of crops, and just that whole network of effect. Because it's tough to be out there on an island by yourself. But the lease structure, it's a very simple, predictable rent structure. And it's all based on soil quality. We use state-specific studies on what a conventional acre will bring, meet or beat that. And it's very predictable for the farmers, so they know what they're getting into.
And you mentioned that a lot of your investors are what I call maybe more socially conscious. Is that a correct way of saying it? Or I think you mentioned, I can't remember, B something or other, or expand on that a little bit.
A couple of things there. A B Corp or a benefit corporation is a company that actually legally commits to balancing profit with purpose. It means we've agreed to be held to verified standards for how we treat farmers, employees, and communities, and the environment, not just how we perform financially. So it's a big part. It's engraved in all of our values. For us, being a B Corp reinforces that whole long-term land stewardship and farmer success. They're not just side projects. They're built in how we operate and make decisions. And then to your other question of it's the impact investors is what we refer to that. Impact investing, a whole other topic, but it's basically an investment strategy that intentionally seeks to generate both financial returns and measurable social or environmental benefits. But it's an approach that involves investing in companies or organizations or funds like us that aim to address significant social or environmental challenges while providing a financial return to the investor at the same time.
So they might be willing to take less of a return as far as money return, as long as there's other social return. Is that one way of looking at it?
It's one way to look at it. But
they still want a return.
That's right. It's important to know. I mean, since our inception, we have been 9%, high single digits annualized return. So, REITs returns are generated largely from the land value appreciation.
Yeah.
And we also pay annual dividends, but it's appealing to a broad range of investors. It's open to both accredited and non-accredited investors. We have over 950 impact-driven individuals and foundations and endowments that are, like I said, accredited and non-accredited, and that can range from anywhere from $5,000 to multi-million-dollar investments.
Now, what's your structure as far as debt versus equity? Is it primarily equity, or you have a little bit of debt that you put on it, or I'm just curious on that?
Yeah, we have a small amount of debt through our note offerings, but our bread and butter is our equity shares. And that's what unlocks our ability to help as many farmers as we can.
So you're generating maybe a cash on cash return of a couple percentage points, and the rest is depreciation.
That's correct. Yeah.
And then you probably have some type of annual appraisal on the land to determine what that appreciation might be.
Yep. 2 valuations a year. Sets our equity share price. Yep.
Okay. Well, we'll go ahead and take a quick break for a sponsor message, and we'll come back and we'll talk about maybe a little bit more, maybe a little bit more unique structure on a REIT, although I think I'm using a term, I'm not sure if it applies, so we'll find out. We'll take the break first.
In fields where weeds don't back down, farmers count on Liberty Ultra Herbicide by BASF. The Liberty Lock formulation delivers stronger coverage and 20% better weed control, something Todd Ryan in Moravia, Iowa has seen firsthand.
I've been using Liberty for a number of years and really got along fine with it, but now we've upgraded to Liberty Ultra, and it seems like to me the burn down is quicker.
That's Liberty Ultra Herbicide. Clear, reliable efficiency. Hear more Ultramonials at libertyultramonials.com. Always read and follow label directions.
Welcome back, everyone, to the Top Producer Podcast. I am Paul Neef, your host, and we're going to rejoin our conversation with Drew Blankenbaker from Iroquois Valley Farmland REIT. I had to cheat there and take a look there. I knew I had the Iroquois Valley right, but since this is a REIT, I think when I looked at your website, it sort of refers to it also as possibly being a Section 721 type offering where a farmer has farmland and they can transfer it into the REIT. Is that something that your fund does offer?
Yeah, we're just starting to offer and explore a 721 farmland exchange, also known as an UPREIT opportunity. And it's a great way for farmland owners to contribute land into a REIT, defer capital gains, very similar to 1031, but without the reinvestment pressure that comes with the 1031. So it's a type of property acquisition transaction in which a property owner who is an accredited investor contributes their property to a umbrella real estate investment trust. UPREIT in exchange for ownership in that UPREIT. And the primary benefit is that it can allow property owners to defer capital gains on appreciated real estate. So historically, go ahead.
And I also diversify their holdings. I mean, they're now part of a bigger, more diversification, which could be both positive and negative. I mean, if they have a home run and it's spread out among, a whole bunch of others, the home run isn't going to be as big of a home run. But if they strike out 3 times, maybe it's not so bad. So, so it definitely has both benefits. And I wouldn't say I don't view there as being any negatives. It's just that potentially compared to being on your own, you are diversifying. So
that's right. Yeah, that's a great point and a huge piece of why this is attractive. It's providing the property owner with an interest in a diversified portfolio such as ours, and the potential for future liquidity. So
now you're saying typically a farmer is bringing the opportunity to the fund. If they want to participate in the UPREIT, I mean, are they getting out of farming, or are they transitioning it to organic, or I'm not sure exactly how that works.
Yeah, we see it come to us in a variety of ways. The REIT equity shares and how farmer pipeline flows. Farmland owners are bringing that to us, but this is where CPAs are very important to this. It's a powerful planning option, and you're absolutely central to determining whether or not something like this makes sense. But we're basically just trying to create better off ramps. It's a potential tool for solving succession planning problems, particularly with multiple heirs. It can solve for liquidity needs, but most importantly, it keeps the land in agriculture, and that's why we see a lot of these kind of opportunities head our way. And like you said, you're not just then in one farm in one geography. You have a diversified portfolio of, in our case, resilient organic farmland with capable vetted farmers that we have at the ready for that opportunity. So for retiring landowners, it's probably the cleanest exit without forcing a sale.
So you had mentioned primarily in Midwest. Is that with corn, beans, wheat, or is that the typical crop that your farmers are growing?
That's correct. Yeah, that's our typical rotation. You see a lot more alfalfa getting mixed in during the transition years as hay markets evolve in those areas. But yes, it's a corn, soy, wheat rotation that gives the best weed pressure control and return to the farmers. It's definitely farmer economic driven.
Yeah, and then you mentioned livestock, so pasture and so on. Is that for beef? Is it for dairy? Or I'm just curious on that.
We have a few legacy dairy investments, but mostly, we call them conservation ranches, livestock operations, beef cattle, few sheep grazing operations, seeing a lot of interest there. But primarily, 80% of our portfolio is in the row crop business.
Okay. What's your number one state?
Illinois.
Okay.
Followed closely by Indiana. Yeah.
Okay.
And we're developing hubs in the rest of the Midwestern states. But like I said, we're in close to 20 states total. We have some anchor farms in Western states that are conservation ranch focused here in Montana, north central Montana, up on the High Line. And it's a diversified portfolio for sure.
Is that near Great Falls then, or whereabouts in Montana?
Yep. Okay. North of Great Falls, north of Haber.
Oh, north of Haber, you're Canada. So
basically, yes. Yeah. The underlying current here, though, is we specialize in organic. These are all organic farms. We're transitioning to organic, and would love to share, why we feel that's important. And
well, maybe share a little bit for the audience why you are passionate about the organic side, besides possibly economics. There is some economics.
Sure. Yeah, and I would say it's mostly economics. Our focus is on organic is pretty straightforward. Organic is good business. Okay. There's growing consumer demand, stronger long-term soil health, it's better farmer economics, healthier outcomes overall. When you line all those up, the land itself becomes more valuable over time. And we're in the business of owning farmland. So we see organic as a major consumer growth industry. And the U.S. has the farmland to transition and meet that market.
Well, I know every time I go into Costco, every produce I buy is organic, it seems like. So, and actually, I sort of, not, my parents weren't organic farmers, but my mother was sort of an organic gardener. She was getting organic gardening back in the 1960s and 70s at the magazine and so on. So I remember reading that when I could start reading, because I'm still, even back then, for the last 50 plus years, I've been a voracious reader. So if I can read something, I read it. It was pretty interesting. It is a little bit more labor intensive, management practice. You have to do more tillage. You can't go out there and spray Roundup on it or anything else. There's certain chemicals you can use, but they're quote natural versus not natural. And then of course manure and so on and so forth for the fertilizer. But what has been sort of the growth rate at the consumer level? Do you have any statistics on that?
Yeah, it's a $88 billion industry. And latest I saw is that, certified organic products are have really accelerated, particularly in 2024. There was I think, an annual growth rate of like over 5%, which is more than double the overall marketplace, which I think probably grew at 2.5% over the same period. So, yeah, I don't know. We have a long list of farmers ready to transition. We just need the investor capital. But
so you have this backlog of farmers. Hey, I would love to have your fund buy. So now you got to go out and get the investor money to buy the land.
Precisely.
Okay, that's a good problem to have. Well, I mean, I guess maybe you'd like to have the funds and the land, but I think you'll get it. So, well, I always like to end with about 4 key questions. Maybe one of these days I'll change the questions, but I still like the questions. But I'm assuming you probably had a little bit of a mentor in this process, maybe more than one, but whether it's at Iroquois Valley or back when you're in, when you're on the farm in the Bitterroot Valley and so on. I'm just curious on that.
Yeah, I obviously appreciate all of my farmer mentors, but yeah, I don't know if I have a single one mentor to point to, but been really fortunate to learn from a lot of people along the way: farmers, conservation leaders, finance professionals, and lots of board members. And I've learned something very different from each of them, whether that's humility in our work, discipline in getting the job done, and long-term thinking and having that perspective. It's a mix of perspectives that has shaped how I approach leadership and in our partnership with our farmers.
Okay. Do you have time for any hobbies?
When I'm not out visiting with farmers, you'll usually find me outside, exploring the mountains, rivers, in the wilderness that we're so lucky to have in this country. Spend a lot of time skiing in the winter, time on the river in the summer, and just being outdoors is how I typically rest, reset, and keep perspective.
So Big Sky, Big Mountain, or something else?
We usually make a trip to Big Sky. Our local hill is Lost Trail on the border of Idaho and Montana, and independently owned, family-run operation, and important part of our lives.
Now, what's the one that's right on the freeway on the border of Montana and Idaho? So which one is that?
That one would be Lookout. Very similar, sort of.
Yeah, I haven't skied Lookout. I've skied Big Sky, I've skied Big Mountain. And then is your ski resort, you can ski on both sides of the continental mountains? I mean, I think you're one of the ones that...
The state line runs right through right next to the lodge, and you ski down Idaho side or Montana side.
Okay. Well, good. So anything keep you up at night?
I love this question because honestly, it's whether or not we're moving fast enough. We have farmers who are ready now, land that needs better stewardship, and growing demand for organic food, like we talked about. So making sure we deploy capital responsibly, but also with a sense of urgency. And that's the balance that keeps me up.
Well,
I think about a lot.
I can definitely understand that. And then finally, what's your definition of success, either in farming or business or organic farming or whatever it might be?
Yeah, success in farming, to me, it's when you have a farm that is economically viable and thriving. The land is healthier than when the farmer started. And then there's this real path for the next generation. And if a farmer can weather tough years and still hand off a stronger operation, I think that's success.
I would tend to agree with that. I mean, I would say the theme, when I ask that question across the board, the theme is similar. I mean, there's nuances, but definitely the theme of passing it on to the next generation, maybe trying to pass it on better than you had it. I think definitely comes through. So anything else you'd like to add, Drew, before we sign off?
Well, thank you again, Paul. I really appreciate it. At Iroquois Valley, we are actively raising capital because we have a long list of farmers who are ready now and looking for land. We have an established near-term pipeline of $50 million plus of farmer demand that comes directly to us because of our experience, our long track record, commitment to patient capital. And if folks want to learn more, our website does a really good job of laying out the types of farmers we work with and how we partner with them and how they can help as an investor. And I would just say that, consumers are ready, farmers are willing, and the opportunity to invest in a healthier, more resilient agricultural system is right in front of us.
And for that website, what is that website? What is the website?
IroquoisValley.com.
Okay, that makes it pretty easy. Iroquois, but although sometimes I have to go, okay, let's see, how do I spell it? So it's just
Farmland,
like
organic Farmland REIT. We'll find you.
Yeah, Google will get you there right away. So, well, thanks a lot, Drew, and maybe we'll have another podcast later on, seeing maybe after you've gotten that extra 50 million and gotten it deployed, we'll see what happens.
Thank you, Paul.
Okay.
Great talking with you today.
Okay, thanks. And again, this is the Top Producer Podcast, and this is Paul Neefer, your host, signing off.
Thanks for joining us. We'll see you again soon for another new episode of the Top Producer Podcast. Be sure to like and subscribe, and remember, all episodes are available on Farm Journal TV and anywhere podcasts are found.